to 2009, and this is the average intraday move. So he's tracking this on an average intraday move, and what he found on that site was that there seems to be some price manipulation in the gold market, where in the early AM session there's the trading is fairly neutral. Then you get that spike down from, or that push down from about 9 o'clock through to about 10 o'clock, all the way through to 12. And then in the afternoon session, you've got some PM price fixing, where the price typically gets bullish and moves up on price, and trying to maintain a certain level on price. Now, it's definitely an interesting read. I'd go through and have a look at what Jim's written up on it, and also go to the website, have a little bit of a look there. He's actually produced a book. If anyone can read German, or anyone has got the ability to be able to translate German into English, or at least read that in German, you'll be able to download that, because it is available in German. So he's done a lot of research on that. And so what Jim did was, with this information, is he's decided to use the trend trader to see if there's actually an edge we can gain from looking at gold from a shorting point of view in the AM, and then potentially taking a long position or long positions in the PM session. So what he's got here is that here's a quote from the author of these charts at a seasonal charts website. Since the beginning of the systematic gold price interventions, the picture is quite different. In most cases, the interventions occur suddenly, so that's that 8 to 12 o'clock time frame. Since then, the average intraday gold price, which is calculated from millions of minutes by minute price, shows frequent dips at 10 a.m. New York time. So do you think we as traders, or I know Jim's put together a strategy on this, but do you think we could take advantage of a sudden price dip in gold at 10 a.m. or around that time, say 9:30 leading into 10 o'clock? Could we take advantage of that if we knew that was a regular, common thing that would occur on gold? Is there a way in which we could use the V2 to definitely take advantage of that? And what strategy potentially could we use to take advantage of that, if we were looking at the suite of strategies we've got, like the pullback, the trend trader, the counter trend, the end of the trend, all of these strategies we've got? How could we potentially take advantage of that if that's setting up and occurring on a regular basis, which it looks like it is, because obviously the data's pointing to that? And what Jim has done is he's actually said, right, well, we're getting a pretty good look at what's happening with crude. Let's see if this stacks up based on our testing. So he's gone through and run his strategy on the trend trader, and the strategy is produced going short in that 25 minutes. And we'll just pull this up here. Let me just grab this here. So using that standard 20-point stop, using the trend trader, trying to capitalize on gold at 10 a.m. You've got a $9,000 profit from a $970 drawdown in 25 minutes of work. And you'll see from this figure too, which is 9:30 to 10 a.m. So he's basically set the strategy up to run from 9:30 to 10 a.m., capturing that sell-off, and using the 25-point stop. Have a look at and I'll show the chart here in a second, but have a look at that drawdown. There's very little drawdown, and have a look at the profitability that equity curve. So that is just for a 25-minute time slot, and that's running beautifully. So then, obviously, thinking about the afternoon session and wanting to capitalize on both, which you would obviously want to do, Jim's put together an afternoon strategy and found that the 1900 to 2000 New York time has produced the best overall profit for capturing that kind of trade out move for the longs, and that's produced that's produced a profit, and combining the two together has netted out about $14,610 for an 1100 drawdown. And he's just mentioning that it's got a 7-trade winning streak. So I'm going to show you that strategy now. So that's just an example of using that seasonal data to hone in on potentially intraday where, and I'm going to show you something on the euro here in a minute as well, where there potentially could be an edge using historical data to trade and set up our strategy and apply the trend trader in real time. So let's just jump into that chart again. So is anybody not impressed with that? Like, I was just kind of blown away by that. That was impressive. So already we're seeing that just that simple application of finding where there is a seasonal bias in the market and saying, right, well, okay, let's run this, and we'll go to Jim's conspiracy gold. Let's run this from exactly when, you know, gold looks as though it's kind of seasonally selling off, which Jim did, and that's just phenomenal. Like, obviously you had to do a little bit of tweaking to get the afternoon session, but have a look at that graph. That's just fantastic. So, and these opportunities exist on this website. There are a number of intraday seasonal biases that show up on the euro, gold, crude. So we've been talking about this for a little while with crude because I think you may have remembered I've noticed that there's definitely a bias. He's already tweaked it a little bit more. There's definitely bias in the crude market where you get a shift at between 6:30 and 7:30 or even 5 o'clock where price will change with the shift of, you've got the euro session and the US session, the traders come in, there's a shift in kind of positions, and you'll see that the crude market will change and move. So what I want us to do next is I want us to use this data, and we'll have a look at this. Go back to these seasonal charts here in a second, and we'll see what we can use as far as the other markets intraday to get an edge there as well. So as you can see from the performance graph there, very, very good. The thing that I'm most impressed about with this is the average trade net profit. The average trade net profit is $122. So that is fantastic. The average winning trade is 376. The average losing trade is 140. The thing that is a bit of a blowaway as well is that it's a 50%. There's actually a 50%. You can see there win rate on the system. So that's just fantastic. So a 50% win rate, and we'll just make that little change there. So we'll go in and just tweak that 10:05. No, I've already got that in, I think. Finish time to 10:05. Yeah, all good. Okay. Yeah. So that is that's just excellent. So good work, Jim. I'll post that. I'll post that up onto the members area, so people can kind of have a good look at that too. So guys, that was one of the things we wanted to share with you, or Jim wanted to share with you, and I definitely wanted to kind of pass on as well, because it just hits home the importance of, don't discount the seasonal data. You don't necessarily need to have the seasonal data to as a filter, but have it as a bit of a clue, or as a great way of saying, right, well, this is just information that's invaluable. It can help me, gives me a bit of an insight or a clue or a point at which I can start testing or trading or looking at potential changes in the market. So that's all we're using it for. We're using it for a little bit of a heads up as to what potentially is coming our way. Now, if you go back to the seasonal charts, which I'll do now just quickly, if I jump back into that seasonal chart, and if we go intraday, because that's what we're kind of focusing on, intraday moves, you'll see that each of the currencies have got specific intraday moves, and I'll just change so we can see the euro US dollar. That's the most recent one there. So you've got your times there, and I'm noticing that on the euro dollar as well. From around about 6:30, 7, 8 o'clock, that change in shift, you've got you've got definitely a move in direction. So a short bias and then the long bias, and you may even just use that as, right, well, between 6 and 8 o'clock there, every day there's potentially a bit of a directional change, so just be watching for that. And then you get, as you finish the US session, you get that kind of either sell off or and that does happen a lot with the euro dollar. You might get a bit of a rally during the US session, and then you'll get that counter trend type setup coming into the Asian session. So definitely that's one to watch. And from that information, we could potentially develop up a strategy based on that as well. So you've got trending and counter trending strategies that could be applied with that seasonal data. So guys, that's what I really wanted to cover today. Just wanted to as you start using and kind of putting together your system tracker, just be mindful of the range, the volatility, and definitely don't discount that seasonal charts website, because that is invaluable information that can give you a clue as to what could potentially be helping you moving forward. So we definitely want to be adding that to the system tracker. Now, we will get to a point where the system tracker is automatically updated, but at this stage it's a bit of a manual process, but definitely worth it. Who is currently using this system tracker to improve the results that they're trading with? Who's breaking it down in this format and seeing improvements in results automatically? Because you definitely will find that from a conceptual point of view of your system, the circuit breaker, what I've done, the circuit breaker on the strategy is for the drawdown. So what I've done is the actual system, the overall system, will have a drawdown or a circuit breaker. But what I've decided is that each of the trading days, Monday, Tuesday, Wednesday, Thursday, Friday, longs and shorts, should have its circuit breaker as well, because you don't want to be trading and find that on a Wednesday, every day is profitable, you're trading every day, and then Wednesday starts to drop off and it starts to draw down, everything else is holding its own, but Wednesday starts to really drop off, and it's actually gone or travelled further than your overall system drawdown, but the reason why you're not seeing it is because it's mixed up with every other day of the week. And overall you're not getting a huge drawdown, but Wednesday is really dropping the ball. So you want to, my feeling is that if you're running a system, each one of these days, as I've said before, is a system within a system. So that should be held accountable for that day. So if you're trading on a Monday, you want some accountability on the drawdown for a Monday, because that is basically a system within a system. So if Monday hits its max drawdown historically, then you just turn Mondays off, and then that means that you're only trading with the best. So yeah, the circuit breaker is the R break. Sorry, Jim. It's basically your max drawdown. So it's whatever you decide the way I like to look at it is, if your maximum drawdown is $1,500, that's the worst the system has ever produced, $1,500 of drawdown, you might find that your average drawdown is around about $1,200. But the worst it's been is $1,500. So you might sit yourself just between $1,200 and $1,500. Or if you want to be a little bit more aggressive, you might move that to, say, whatever it is. You might want to bring it up to $900. Yeah. So that's it. All right, guys. I just thought I would share that with you. That report from Jim I'll upload, and great work, Jim, on that. That's fantastic little gold nugget from the seasonal charts, and very, very, very good work. So I'm going to have a look at the euro, because Charles and I are working on the euro at the moment, so I'm sure we can extract something there from that. Excellent, good stuff. So fantastic, he's already applying that the gold strategy. Well done. All good. Thank you, guys. Thank you for sharing that quality stuff as well. Very much appreciated, and I'll catch up with Nick if you want to Skype me or IM me, Nick, and we'll get together and catch up too. So, guys, thanks for your time. That's it for tonight. Any questions before I go? Otherwise, I'll get this. This is recorded, and we've actually got picture this time, which is great. It's always handy to have a picture to go along with. So until we our next Thursday catch up, which will be basically on. I'm going to take you through volume spike and volume divergence next week, and how you can get the most out of those two indicators. So we're going to do a little bit of work on that, and because they're indicators that are in the strategy, but we haven't really done a lot of work on those. So we're going to spend a bit of time kind of going through how to use that, how to get the most out of those two. So, guys, thanks for your time. Have a fantastic rest of the day or night, and we will catch you either in the next coaching session or next Thursday. Cheers.